Hi there, welcome to Kneppy Invest and welcome to Fiducian Group's financial year 25 results. For full disclosure purposes, I am a shareholder of this company. I've been a long-term shareholder of Fiducian Group. It's a fairly small company on the ASX, and I would say the vast majority of investors on the ASX don't know this company exists. I think even experts don't really realize this company exists, but you can find high-quality companies in small cap space, and I would classify Fiducian as a higher quality company, but I'll touch upon this more later in the video. Now, Fiducian Group isn't really, or doesn't really have any significant moat, but what they do fairly well. And if you go to their homepage, have a look at the About section and their Our Business part, they do have 5 different divisions, including financial planning, investment funds management, superannuation, investment platform administration, and IT solutions. I haven't looked at the annual report just yet, but I am assuming you're going to get a breakdown of how these 5 different divisions have performed in financial year 25, but they're all performing quite well. Okay, so what I'm going to do in this video, oh, by the way, the other thing you could do, if you really want to know more about this company, and a lot of investors want to know about the management and the board. For some investors, that's probably the most important thing when it comes to investing in a company. And for some reason, this is not working. There we go. Our people, it's just not working. Anyway, so have a look at that and you can get a better understanding on the management of the, there it goes. There's actually different sections. So like senior management, Indy Singh. You want to know more about Indy Singh? I do have a fair bit of time for Indy Singh, Robbie Southall, Rahul Guha, and Conrad Burge. There you go. So if you really want to know about the management of this company, I would probably recommend going to their website. Okay, so what I'm going to do in this video is I'll briefly go through their presentation just because it looks pretty. They did release alongside their results. And then we'll have a look at the financial history and I'll show you why I would consider Fiducian Group to be a high quality company, even though it's still fairly small. Market cap might be $400 million, something like that, but it's growing. And then we'll have a look at the chart. By the way, what is the market cap of this company? What is the market cap? It's about $400 million. I was right. Okay, so let's have a look at their results. So I'm going straight to the presentation, and this was found on page 14. Yeah, page 14. They do go through their different divisions above this particular page, so I won't bore you with those details, but the most important thing here is how the company has performed the last year. Now, since I've held Fiducian, I have not even thought about selling any shares. And in fact, every single year, they don't disappoint me. Their results don't disappoint me. And there's no reason to think that they can't keep on growing for the next 5, 10, 20 years or so. And in fact, they really highlight how this company has performed against the index and how they've grown over the last 13 or so years, since 2012, 2013. Okay, so revenue up 13%. And because margins have increased, expanded, underlying EBITDA up 19%, underlying profit up 19%, and of course, basic earnings per share up 19%. So that's the benefit of increasing margins. Even if revenue is up slightly, you could see expansion in profit. But in this case, revenue up 13%. And that is one of the things I'm looking for. So a really good year for Fiducian Group. They also have the different segments. So if you really want to know how each different segment is performed, have a look at this. Now, some might say, and I'm included in this, that when a company has all these different segments, I sometimes hone in on the best performing segment, but I won't do that in this case. They're all performing quite well, so no complaints about that. But here is where the management compares the performance of Fiducian compared to the All Ords. Now, since inception or since they IPO'd, Fiducian has gone up, the share price has gone up 1,948% compared to the All Ords, only 275%. But for those who are more interested in dividends, by the way, that includes dividends, so nice return. I wish I had a CAGR. One thing I wish I had here was a CAGR. They don't include that, but we'll have a look at the CAGR in terms of total returns in a second or so via Fiscal AI. But here's another interesting thing. Now, I probably would have said that, well, I was going to say maybe that dividend yield back in 2013 wasn't that high, but it was 7%. But if you bought $1,000 of Fiducian shares in 2013, your yield on that $1,000 right now is 44%, and it just keeps on growing. In fact, it looks like there was only one year where dividends didn't grow all that much. Now, it looks like dividends have grown every single year. Yeah. Dividends have gone from Yeah, $72.16 to $480.41. There you go. So a nice increase in dividends over the past 12 years. And this is another reason why I've invested in this company. Because even though I'm not focused on dividends, this is actually quite meaningful over the long term. You get really good returns if a company keeps on increasing their dividends. Okay, that's all I'm going to really do when focusing on this company's financial performance. It was a good year, a really good year from the company. Okay, now on to the financial history of Fiducian Group. Now, the market cap of the company is only $400 million, enterprise value 377, so they are or do have net cash. Now, the first thing I usually focus on is revenue growth. Now, revenue growth over the last 3 years is like 8.7%, but over the last 5 years, 10.2%. And in fact, if I had a high quality screener, my rule of 10 screener, this company would satisfy my high quality screener because revenue growth over the last 5 years has been 10.2%. Earnings per share growth over the last 5 years, 12.1%. In fact, the growth over the last 10 years has been just as impressive. Now, you might look at that growth in revenue and earnings per share and say it's slowing down, but that's because I think there was 1 year where there wasn't much growth in this company. In fact, that was the 1 year, was it 2022? There was the 1 year where I was slightly disappointed, but I didn't even think about selling shares. So a nice growth in revenue and earnings per share. If you have a look at the dividends, which I don't usually look, it's not usually a deciding force for me in terms of investment. Dividend yield 3.9%. So even now, it's actually quite nice dividend yield with a payout ratio of 79%. Now, I would prefer that to be a little bit lower, but I'm willing to give a pass to Fiducian Group. Now, margins, nice margins, operating margins 29.7%. We'll have a look at the history of margins. What I'd like to see is margins expanding through time, and we know that is true for Fiducian because earnings have been growing at a greater rate than revenue, which is important. And return on invested capital and return on equity around about 30%. That's a 5-year average. That's a sign, another sign of a high quality company. PE ratio 21.8. We'll have a look at the PE ratio in a second, more than a second, like a few minutes. Now, that is on the high side, but I'm just going to give a bit of an argument counter to that. Now, it is on the high side, but that's not necessarily a reason to absolutely not invest in this company for the long term. Okay, let's have a look at the history. Financial history. Actually, that's the PE ratio. What we'll do first is have a look at revenue and income. And this is exactly what you want to see. Well, this is exactly what I want to see. Maybe not you, because you may have a completely different criteria in terms of potential investments. But this is exactly what I would like to see. Revenue increasing every single year. Income increasing every single year apart from one. And it was actually 2023. That was the only reason I was a little bit disappointed was that profit did drop that year. And you'll see that margins also dropped that year. But it was a one-off. It was a one-off. And everything to like when you look at this company. In fact, if you have a look at the growth in revenue, 10.8%, income 13.7%, but even more importantly is increasing margins. Now, I think, I've only included operating margins, not gross margins. Okay, so we have seen, you can see that little bit of a drop in operating margins in 2023, but if you take that away, margins have increased. In fact, last year at 29.7%, that was a record year for this company in terms of operating margins. Now, that doesn't mean margins will keep on increasing, but at least they're not dropping. And I do prefer to see this sort of profile, a nice increase in margins over the last 10 years. Another thing I should mention is really nice operating cash flow and free cash flow for this company. Again, exactly what you want to see. A little bit of dip in 2023. And the operating cash flow and free cash flow is actually higher than the profit. So no red flags here when it comes to this company's cash flow. Okay. Probably the other thing is return on invested capital and return to equity. Typically, when I look at this, I don't want to see any don't want to see either of these metrics dropping, and we don't see that. In fact, it looks like both the company's return on invested capital and return on equity was a record high in financial year 25. So 2 thumbs up, and these are really nice high quality metrics. Quality metrics. Okay. Next thing we're going to look at right now is the PE ratio. Now, I've had a look at this. I have not looked at some of the other valuation metrics. So, for instance, this is price to book, free cash flow yield, and we'll have a look at EV to EBIT. Okay, so there's not much difference between all these, was it 5 valuation metrics? So I'm just going to focus on P ratio right now. Okay, so let's have a look at this. So this goes back to 2016. So we're talking about a 10-year history. In fact, it's a 9-year history. Anyway, so this is a 10-year, or should be a 10-year history. Anyway, so if you have a look at this 10 years, it the P ratio of this company hasn't been expanding, so we haven't seen any sort of multiple expansion over the longer period of time. Now, it does look like the P ratio tends to be limited to below 22. So don't forget the P ratio of this company is 21. And we have seen the P ratio of this company get to 22 through, well, twice, back in 2017, also back in 2021, early 2022, and it's getting quite close right now. And on the low side, the P ratio tends to drop as much as 12. Now, during the COVID-19 financial panic, it dropped below 10 for a brief period. That was prime buying areas. But yeah, if you get or see the P ratio of this company getting to 12, that's a good buying. That's a really good buying. Now, last time it got fairly low was back in November 2023 when it got down to 13. That was good buying as well. I did not buy more shares. I should have. But in saying all that, if you bought shares right now, how could you perform moving forward? And what I did is I went back to the last time the P ratio, no, the first time the P ratio got to 21 and above. That was in October 2017. I actually should write this down. And it also got to 21 or near 22 back in October 2021. So 4 years apart. Fun enough, we're moving towards October 2025. So does this company get to a high P ratio every 4 years in October? Wow, sample size of 3. Anyway, so what I'd like to do here is let's go to the overview and have a look at total returns of Fiducian Group since those 2 times the P ratio got to like 22. So what I'll do is I'll put that up there or over this side. And the total return of the company is capital appreciation or share price going up and also dividends. So let's go. And by the way, so this is the last 5 years, CAGR of 27%. If you look at the last 10 years, CAGR of 26.8%. If you look at the last 15 years, CAGR of 21.8%. If you look at the last, well, not the last 20 years because it doesn't go back that far back, I thought this company listed in 2013. Anyway, so you can see if you look at the last 5, 10, and 15 years, a pretty nice return for Fiducian Group. And that is a reason why I like this company. It's a really nice, consistent performing company. And I just have no fears about the future performance. But let's go back to October 2017 and just see what the CAGR in terms of your returns would be if you go back and you bought at the peak in the share price. Now, I'm assuming the share price got to a peak there just based off the P ratio. So what was it, October 2017? Okay, so let's have a look. Okay, so we'll go. No, yeah, that's right. It says CAGR of 17.6%. And would you be disappointed with that? I think the answer to that is no. And if we go back to October 2021, we get a CAGR. Whoop, I went the wrong way. CAGR of about 17% per year. Are you going to be disappointed with that? In fact, the share price, you can see the share price was dropping from there all the way through the next 2 years. So you had a period where you didn't see much return, and then all of a sudden the share price just went bananas in 2024 into 2025. So just because you might buy when the valuation of the company looks quite expensive in terms of history, doesn't necessarily mean you're going to get bad returns. And we've seen that with Fiducian over the last 15 years if you bought at the high PE ratio. Okay, so let's have a look at the chart for Fiducian, not Mosaic Group. I'm trying to look at that one. Fiducian Group, ticker code FID. By the way, this is the weekly chart, and this is a high quality chart. This is a sort of chart you would, in fact, they listed in 2015. I thought it was longer. I thought it was earlier than that. Now, this is the chart of a high quality company. In fact, I've not only included the 200-week moving average here, I've also included an uptrend line. And that uptrend line has acted to perfection since they listed. Now, the share price right now for Fiducian is well above both the 200-week moving average and that uptrend line. So it is, just based off this chart, looking a little bit topish. But again, if you bought in October 2021, you can see this little peak. Their share price was at $9 there. You've still done fairly well since then, even though you're underwater for a period of time. And if you bought in October 2017, you bought at a high point, and it took a while before the share price got back up to your level. So in this case, you do have to be patient if you're going to buy right now, because there is that potential share price could pull back. I have not even thought about selling shares. I don't care that it might be looking a little bit topish at these levels. I don't care. I'm willing to maintain a holding in this company for the long term. But again, a nice looking chart for Fiducian. And if we have a look at the daily chart, the chart looks pretty good. Still looks pretty good. Share price did pop up when they released results, and understandably up 11.26%. But the chart looks pretty good right now for Fiducian. Okay, that is all I have at this look at Fiducian Group's financial year 25 results. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.